hike if and when it comes?
Well, I think everything's pretty much open, and obviously the rate hikes will start to hit the economy in some way or another by reducing lending growth, and also on the corporate sector side. So probably what the government has to do here, and it has the leeway to do it, obviously given its good budget situation, low public sector debt to GDP, it is basically pushing the infrastructure side of the economy and supporting corporates, SMEs.
So, but as an investor in Turkey, what should you be anticipating from this package? Is it something you should be feeling optimistic about?
I think generally we should be feeling more optimistic. I mean, the central bank hiked, as we know, rates, the main policy rate, by 550 basis points, which is essentially more than a doubling of the interest rates. And that means that we have now real interest rates on a forward-looking basis. So that's the thing that should calm markets down the most. Obviously, some will be out there testing the willingness of the central bank to continue along this line. But the main thing here is that we need to see a calming down of domestic participants. Because what we see in the last couple of months is that people have been putting much more lira, selling the lira and buying in cash dollars and putting them in FX deposits in banks. And that needs to be calmed down.
And are we seeing that calming of domestic participants?
We haven't got any data up here since they hiked the rates, but I think that this should be the case, given that we've seen the dollar lira, as you said, stabilizing. Because it's not more a shorting by foreigners, if you like. Foreigners are staying on the sidelines here. It's more a calming down of domestic participants in their role of selling the TRY.
Just on a bigger scale, Simon, we saw the consumer price numbers this morning. They were high. Can this hike really do much in light of the emerging market sentiment generally, as well as the internal political risk in Turkey?
They can, and actually for emerging markets as a whole, it was very important that Turkey, the central bank, does something and acts last week. We have the policy rate now at 10%, so on a forward-looking basis is about 2 to 3% real interest rates, which puts them at the higher end of the scale. We all knew that the central bank in Turkey had to do something. We all knew that real rates, interest rates in South Africa had to move. So those were the two outliers, if you like. Now, we are seeing other central banks moving, and we have seen them in the last 6 to 8 months in general in emerging markets, such as India, Indonesia. Brazil is the most proactive central bank, although it's the least independent on paper, if you like, out there in the EM space. But this had to happen in order to calm the FX backdrop down.